Good morning and welcome to the Bluebird Merchant Ventures Limited investor presentation. Throughout this recorded meeting, investors will be in listen-only mode. Questions are encouraged, could be submitted anytime via the Q&A tab situated on the right-hand corner of your screen. Just click Q&A, type in your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all questions submitted today and publish responses where it's appropriate to do so. Before we begin, we'd like to submit the following poll. I'd now like to hand you over to Aidan Bishop, Executive Director. Good morning.
Hi, good morning. Thank you very much, and welcome everybody to the presentation. I'm actually in the Philippines at the moment, so sometimes we get internet connectivity issues. So apologies if it doesn't always come across completely clear, and that's why I've got the camera off. So I'm going to take you through the presentation on Bluebird, and then I'm going to answer as many questions as possible. I've already received about a dozen or so questions, and we'll go through those after the presentation. So Bluebird, a joint venture model to develop high-grade gold mines in South Korea and the Philippines. So just the overview of the company for those who might not be shareholders or familiar with Bluebird. We are listed on the main board of the London Stock Exchange. We actually listed in 2016, and at that time we only had a 25% interest with an option to increase to 51% in the Batangas gold project. And since then, of course, we've enlarged the company to include Korea, and now we have a larger interest, of course, in Batangas. So across our three projects, collectively, we have about 1.8 million ounces of gold across the portfolio, and we are very different from an exploration company in that we are looking to take these three projects into production, and we'll look a bit more at that as we progress. So recently, we pivoted our business model to a farm out model where we have free carries. And so, of course, we've done that first at Batangas. We farmed out the Batangas project to a local company and a family that has decades of experience in the mining industry in the Philippines in production, and that's going very well. And more recently, we announced farming out the Gubong project in Korea, where a local partner will be able to achieve a 60% interest by investing a total of $5 million. So that will take us to a production, basically. So at Batangas, Bluebird is free carried until it receives the last two permits required for production, so a production decision. At Gubong, we're free carried until production, and we've also announced that we are in the advanced or very advanced stages, I would say, of a farm out at Ko Chang. And so that's what we've pivoted our model towards, and we go into a bit more of that as to why we've done that as we progress. So you can see that the company, the share price, it's obviously gone up quite dramatically over the last couple of months. I think the lows were about 0.45, 0.5, and we're about 1.8 now. So it's been going up quite nicely, and personally, I think there's a lot more room for us to continue to grow the share price and increase the share price. And of course, we have a great incentive to do that as management. And you can see the management stake. We've got about 25% or so of the company, and so there's a significant incentive for us to obviously to improve the share price and progress the company. So going on about this transformative model around our free carry model, targeting free carries at all three projects. And really the decision to do this was at some point last year when the share price was around 0.5, and the market cap at the time was only about 4 or 5 million, I think it was. It really became apparent that if you're a 3, 4 or 5 million pound company, how are you ever going to raise the quantum of capital required to bring about production across all these projects? And so it was really with that thinking that we started to explore the merit of a farm out model. And that's and it's working. It's working well for us with the right partners, local partners that have capital. I think one of the questions was around why we did the farm out, local partners, and so forth. And I think it's important to note, if you're an exploration company, you don't really make much of a impact in terms of environmentally, socially, or even, and you're not really that visible because But when you're trying to get the gold out of the ground, it becomes a whole different ballgame. And there's permitting processes, there's obviously social, political processes to go through, and of course, in a country like Korea where English is not the language, and it's a completely different culture than sort of British or Western culture, it just makes a whole lot of sense to have local partners who know how to navigate the local environment. So that's why we started to do the farm out, and so far it seems to be working well. I am absolutely confident that we will get the farm out deal done on Kochang. I know we've made announcements about being in advanced discussions and so forth. Those continue to progress, and I believe imminently that we will have something positive to say as relates to Kochang. In fact, I'm going to Korea on Monday, so I'll be there with Graham Fulton, who is part of the BLUEBIRD technical team, and we're going to be there for the whole week. We'll be in Gubong and we'll be in Kochang. So to look at the portfolio, you can see the two projects we know, of course, in Korea, and the project in Batangas in the Philippines. What I find interesting about all of these projects is how accessible they are. So I can actually, right now I'm coming to you, I'm in Manila. I can drive to the Batangas project in about 3 hours. If you look at the Korean map on the left here, from Seoul to Gubong is about a 3.5-hour drive. Great roads. And then from Gubong to Kochang is about a 1.5 to 2 hour drive. And literally the entrance to the Kochang mine is literally 10 meters from the road. So you've got great infrastructure access, which is a significant cost saving. So here we are, we're looking at our strategy. The grades are good in all of our projects. If you look at the Batangas project that we're currently going through what you call a declaration of mining project feasibility, which is a feasibility document. It's a requirement as part of the permitting process. We're focusing on the high grade gold in Lobo. Of course, the grades were very, very good.
Aidan, hi, ladies and gentlemen. Thank you very much. Aidan, we just seem to have just lost you momentarily there. If you could just step back.
Gubong and Kochang.
Ladies and gentlemen, do please bear with me while we reconnect Aidan. We'll just wait one moment for that connection to reappear. Ladies and gentlemen, do please bear with us. Aidan's just reconnecting as we speak, so give me a few moments. And unfortunately, that internet connectivity issue looks like it's popped up, so bear with us 1 second while we're getting back in. Thank you. Aidan, thanks for coming back. Let's just get you back up. Aidan, hi, you're back with us. Sorry, we missed you for about a minute there. You just disappeared. So you're back in the room. Thank you.
Okay, apologies for that, guys. I don't know what every day in the Philippines around this time, the internet becomes quite unstable. You will be able to go to this presentation. It will be uploaded, I believe, to the website today, and you'll be able to have a look at that. Maybe given the instability of the internet connection, maybe what I'll do is I'll start going through the questions. There's quite a lot of them. I'll start doing this. So question one was, what does the company see as a realistic AISC, all-in sustaining cost of production of gold at each of the company's projects now? That's a good question. We've made announcements previously on Keochang and Gubong, where at the time when we assessed it, we were looking at about a $700 costs per ounce, which obviously is very low. There was a pre-feasibility done at Batangas about 10 years ago, and again, that was also a very low sub $1,000 costs. And when we reworked the declaration of mining feasibility around the high grade Lobo, I think you'll see that cost come even lower, and also an increased number of ounces. So that'll be interesting to see. But again, very low costs across all three projects, which of course, with gold prices around $2,300, is good. The next question was, what time scale does management now see for initial gold production at any of the projects? I think that's a good question. So of course, we're in permitting processes in Korea. Keochang could be in production 6 to 9 months once there's permits. Gubong will take longer. Batangas, once we've got to that production decision, we've got those 2 permits, we could probably be within production within 12 months. I think that's realistic at Batangas. Next question. Have the authorities in Keochang stipulated that they favor a South Korean partner in order to issue a permit? No, they haven't done that. So that's just a decision that we took in our assessment of Korea, the country, the social setting, the political setting. It's just a whole lot easier to navigate with a local partner than it is for a company that none of us are from Korea, none of us speak Korean. So no. Next question was, can you outline what obstacles we still need to get over before permits are granted and production can proceed, please? Yep. So Batangas, 2 key permissions. A direct declaration of mining project feasibility. So that's being undertaken now. What is a declaration of mining project feasibility? It's basically where you present a technical document on the life of the mine, the ounces per year that you want, or the tons you want to process, the ounces per year, the costs, and so forth. So once we have that declaration of mining project feasibility, it's going to be a pretty accurate reflection of what is actually going to be the case when we start mining at Batangas. Of course, in Korea, the permits, we need a mountain temporary use permit. I think also it's worth bearing in mind that we can actually do some work now, even without a mountain temporary use permit, because we do have in Korea what is called a mining right. That's your sort of governing permit. We also have a permit to develop, so we need to get a mountain temporary use permit, and depending where we set up processing, there'll be some sort of permission that was going to be required there. So again, that's also the reason for bringing in a local partner who would have a lot better understanding than we would of how to navigate permitting and so forth in Korea. So the next question was, can you provide information regarding the heavy machinery required to go into production and advise if these are already bought or are these still to be obtained, please? So we haven't bought any machinery at this point. The time to do that would be once we have all those permits, and then that would be the time to start buying machinery. So at Batangas, I think it's worth mentioning as well, like at Batangas, it's probably you look to contract out a lot of this to contractors, right? So it wouldn't be necessarily us buying all this equipment, us necessarily doing the mining per se. You would typically, it would not be unusual to have contractors to do certain things. So for example, in Korea, if we do some work on adit refurbishment, that's not necessarily something we would necessarily bring the equipment in. You could actually put that out to contractors. So some of it we might have, and some of it could be. Why was having local South Korean investors on board a prerequisite by the government to moving the projects forward? Why weren't BMV able to do this without them? No, it wasn't a prerequisite by the government. The government did not insist you must have South Korean investors. That was a decision that we made. And again, it comes down to really language, culture, understanding. It's just a whole lot easier to navigate with Korean investors. Similarly, in the Philippines, even though I've been in the Philippines a long time, again, it's easier for Filipino investors partners to be able to move things forward than it is for foreigners. I think that's probably true in many countries of the world. Next question. Can you tell us more about the JB Consortium? Who are they? All we know, are they our local businessmen? Do they own a mining company? Have they mined for gold before? What business have they been in? So yeah, I presume you're referring to the Korean consortium for the Gubong project. They are all very successful people. They've got various different businesses. One of them's got a graphene business. They've got one of the most advanced graphene companies in the world. They personally invested, over $100 million into that business over the past decade or so. So have they mined for gold before? No, they have not, but that's okay, because they are effectively an investing partner. Within the agreement we have with them is that technical support advice can come from BLUEBIRD. So they're looking for us guidance on the technical side of the project. What they're really there for is to be a local partner, is investment, and to be able to navigate permitting, and also the local community and local politics, etc. Okay, when do you envisage the MTUP being granted for both projects? Good question. I wish I knew the answer to that question. So of course at Kochang, the Board of Audit and Inspection is reviewing the MTUP process as we speak. Now they were meant to do that. They were meant to do that within, I think it was 60 or 90 days, but it's been quite some time. And they did write to us a couple of months ago saying they, inundated with workload. So yeah, we just gotta wait until they do their process. I think one of the reasons I'm going to Korea next week with Graham is to look at what we can do, or what can be done at the projects now, before we even get the MTUP. So I'm keen that and the local partners keen as well, to see what we can do to move the projects forward. So there's certain things that we can do inside the mine without an MTUP. So we're going to be looking at that next week as to what we can do without an MTUP, what needs an MTUP, how we can really get this project moving. So that's about the best as I can answer that question. What is the NPV of all three projects to BMV working interest? I don't know. The NPV at Batangas, there was one before that was done 10 years ago that was quite a big number. It was over $100 million. I don't know if we worked an NPV. I think we did do an NPV at Gubong and Kochang. Personally, I don't really look too much at NPVs. I'm really more focused on moving the project forward. Let's get it into production. An NPV is a bit of a theoretical number anyway, right? And how many mining companies publish NPVs, and you look at their share price and market cap, it's not even close, right? So I think we have published work in the past on NPV, but it's not something that I really look at, to be honest. What is the planned production output for Kochang and Gubong? So the plan previously was always to start Kochang first. Why was that? Because it's a small project, technically very easy, and we could be starting, we could be getting like 10,000 ounces or so a year out of that, and then increasing that and moving to Gubong. The goal was to get about 100,000 ounces a year of production from both mines combined. Of course, you wouldn't start there; you would build up to that over time. So that's the production hasn't really changed. Yeah, it's just we got to once production starts, I suspect it will start 10,000 or so ounces at Kochang and then move across to Gubong. In fact, one of the reasons as well I'm going to Korea next week, of course, is to hopefully close out the Kochang discussions positively, and also to discuss the strategy with the local partner around which one's going first. Management consider a share consolidation from 700 million to 200 million shares, and in the name. Consolidation, haven't really thought about it. It's got billions of shares. I don't think we want to get to that point. Company name change, absolutely. Yep, I've been advocating that for some time, and I think you will see something very soon in terms of a name change. So watch this space on that. Not necessarily sure it's going to have the word gold in it. It might do, it might not. But I guess that leads on to the next question is, what is the strategy to acquire new assets? And with the partners you have, are they not competing with you on prospects? That's a good question. So let me ask the latter part of the question. No one's competing with us. We haven't been. As a company, we don't have an active strategy. We must go and find new assets. I think it's really, for us, it was about pivoting to this free carry model. Once we conclude Kochang, which I'm sure we will, then there could be opportunities for more assets. Those might not be in Korea. They could be. They might not be in the Philippines. They could be. We're not really competing with our local partners either in the Philippines or in Korea. As I say, particularly the Korean partners, they're not mining experts at all. So we're not competing on prospects. It's not easy to find the right type of project, right? Particularly if we stick with our focus around reopening old mines. It's not easy to find the perfect projects that sort of fit our approach. But yeah, it's in fact, I was at a meeting 2 weeks ago, and somebody has an old gold mine, funny enough, in Indonesia, and they were taking me through a presentation on that, which all looked rather interesting. But we'll see what happens. How did you arrive? Next question. How did you arrive at the $5 million figure for 6% of Gubong, as this seems low in comparison to what was paid for the project, especially now the gold price has risen? What did we pay for the project? We had to pay Southern Gold for Gubong. It was about $6 million, I believe it was, and we paid them in shares. So, which of course they are now completely out of the equation. I think they probably exited about the 0.5p level. Oh, but anyway, there you go. Is it low? Was it low? I don't know. Okay, the gold price has risen now. The way I look at it, it's, if we get these permits, and we get into production, there's a lot of money to be made here. But what I recognized is just the need to have a local partner. So there was no real. I don't think there was a whole lot of science behind how that figure was derived. We went back and forth on some numbers, and that was the number that we agreed to. I think it was an important number for Bluebird because we believe that production can be achieved with that number. So if Bluebird is free carried and we're producing gold, that's a very strong position to be in as a company. Glenn B, thank you for your presentation. Shame about the internet connection. Sorry, welcome to the Philippines. I'm a long-term investor and freely admit to knowing nothing about mining. Okay, well, we're glad to. 3 questions. Here we go. Scrolling down. What do you estimate to be the life of mine for Kochang, Gubong, and Batangas? That's a good question. So Charles Barkley, who 40 or 50 years in mining, always would tell me is that underground mines never really die. They can go on. So if you look at in fact at the presentation, there's a slide on the upside at Gubong. You can see like a red area there where drill holes historically have gone down into that, and they only mine down to 500 meters. And as an orogenic gold deposit, these typically go down 2 kilometers. So at Gubong, the life of mine could be, it could be decades. Once we get into it, we will see. Kochang, again, they only mine. There's only like 3 levels of mining there, so a lot of upside there. Again, there could be a significant life of mine there. Batangas. So at Batangas, one of the with the declaration of mining project feasibility, you have to have a 10-year mine life. It's a requirement by the law here for that. So we would model everything around the 10-year mine life. But again, at Lobo, where we're focusing on, the previous partner only did very limited drilling and exploration work, which proved up a resource and a reserve. But again, significant upside to that. So there could be a lot longer to mine there. So I think that's the great thing about all these 3 projects. They all have upside in terms of extra ounces to be discovered and added to the book. So the next part of that question was, when or at what point do you estimate the company will start to generate revenue? I understand that in the short term, the revenue from Kochang will be used to develop Gubong and perhaps subsequently also Batangas. No, so we'll start generating revenue when we can start mining, which we touched on earlier in the presentation. I don't think it's necessary. When we were the 100% owners of these projects, the idea was to get Kochang going first, and then maybe we can use some cash flow there to slowly start doing some things at Gubong. But I think one of the better things about getting a local partner is we've got a 5 million farm in there, which will take Gubong into production. We're looking to do something at Kochang that again will take Kochang into production. And of course, Batangas, we're free carried to a production decision. So quite likely that Bluebird won't need to, that we will be producing at Gubong and Kochang before Bluebird has to contribute any more cash. Batangas is being the declaration of mining project feasibility is underway, and that will show the costs to bring about production there. I'm personally expecting that the costs of bringing Batangas into production is going to be very low. It's going to be very low. So we'll see how that looks. And the third question here, looking beyond this, what are the company's long-term plans for revenue? Is a dividend envisaged? If so, when and by when? I'm not necessarily looking for a date, more an estimation of at what point in the production process. Yeah, I mean, if we're making, if we're profitable, we're producing enough gold, and why not? We definitely would look at a dividend. As to when that would be, I don't know. In terms of how many ounces, not sure on that one either. I think the longer term plan was to build up Korea to 100,000 ounces. I think we have mapped out a plan to be able to do that over a 5-year period. So if you're producing 100,000 ounces of gold a year, the share price is going to be a lot greater than it is today, and dividends becomes a likely annual or a regular event. Next question, Michael B. What happens if permits are not granted? Well, so that's a good question, because I think some people think it's all binary. Well, okay, let's say if the mountain temporary use permit isn't granted, so we'll apply again. It's very simple. So it's not like it's game over. So a mountain temporary use permit in Korea is related to a specific piece of land. So you could apply again, you could pick a new piece of land. Yeah, so that's we'll just apply again until we get it. If that happens. And again, that was one of the reasons why the value of a local partner, because they will be able to understand the process, the politics, the social, the community much better than we will ever be able to do so. At Batangas, a mining project feasibility is not a case of it's granted or not granted. It's basically it's a technical document that ends up getting approved by the government. The environmental compliance certificate, again, that comes out of a process as well. So we fully expect that we will be able to achieve those. Okay, Michael B again. Does the company have enough cash to get the company to production? Well, we're not financing production, so that was again why we had a local partner. So 5 million at Gubong should be sufficient to bring about production at Gubong, and when we conclude the farm out deal at Kochang, we will look to be able to be in production there. So if we were going into production today at Batangas, then of course there will be some cash needed for that, but we don't know exactly how much yet, which is what the declaration of mining project feasibility is going to do. So I think the earliest production realistically at Batangas, optimistically, would be towards the back end of next year. And if we get the permits by end of Q1, then that's realistic. Let's see. Next question, Richard J. Assuming cash flows on the near horizon, say 2 years, what are the plans to get these out to long-suffering shareholders? Assuming cash flows on the near horizon, okay, I think you're asking how are we going to communicate to shareholders about cash flows? If that is what is being asked, then once we have the declaration of mining project feasibility at Batangas, we will be able to publish a lot of information about that, and then you'll be able to see how the cash flow looks like. We've already published certain information on Kochang and in Gubong. I'm sure that was done pre-pandemic. I'm sure we can update that with the help of the local partner as well as we continue to progress. So there you go. I think I've got.
And yeah, you've covered off every single question. So thank you. Your internet has actually been stable. We're just monitoring throughout. So if you do want to carry on at all with any of the slides, then do feel free, or wait to see if any further questions come through.
I'll tell you what we do. I mean, feel free to keep asking questions, but I've just pulled up this slide on Gubong. One of the questions was about upside, life of mine, and so forth. Here's that slide I was referring to. So if you look at Gubong here, right, and that red zone, so there were some historic drill holes that went into that, and there was grade. So you could see the life of mine could extend beyond the 500-meter area that was mined. And that could be substantial. It's not really possible at this point to predict how that might look. Of course, at Gubong, when the Gubong mine closed, it closed in 1 day. So your first mining is really just to remove pillars, posts, scraps, ore that was left behind, and so forth. And of course, ore that was left behind that was not economic then will be economic today. And of course, technology has improved today. So we're expecting, substantial production there. So that was Gubong. Let's see if I can pull up the Kochang slide. Here we go, Kochang. So you can see here that there's two different parts to this mine. You've got the silver mine and gold mine, and along the surface, it was plotted how the two join up. And again, that hasn't been looked at thoroughly. So there is a lot of upside there at Kochang. Now the question has come through: is the 100,000 ounces production figure gross, so around 40k net to BMV? Yes, that is correct. That is correct. So that is correct. 40,000 ounces of gold per annum at $2,300 an ounce would be, yeah. Let me pull up my calculator here very quickly. Would be quite a lot of money. So 40,000 times 2,300 is $92 million a year. So if we're making $92 million a year, that's pretty good. Is it, another question coming through, Richard, is it most appropriate to now view the company as a pseudo streaming company, albeit where we have supplied physical mine rights instead of cash in exchange for a stream of cash receipts for the period of life of mine upon mining commencement? Is it most appropriate to now view the company as a pseudo streaming company? Don't know. Haven't thought about that one. I don't know. The way I look at it is we are looking to go into gold production. We got local partners at 2 projects, about to be 3 projects that will take us to production in Korea, production decision. And it could well be at that time, we have a much more active role in the company. I don't know. So we'll see what happens there. Excuse me. Some more slides here on Kochang. Aidan, small typo error on the chart. 712,865,942 shares in issue. And it should be okay. Looks like we have 900 shares too many. So okay, noted. I will have that corrected. Thank you, Barry K. NPV here. Somebody asked about that NPV. This project here was the NPV of 181 million. There we go. Another question: do we see BMV being another Apex in terms of being taken over? That's a really good question, actually. I think that given the upside of Lobo, so at Batangas we've got established JORC resources of 440,000 or so ounces. When these projects have those 2 permits and production begins, it'll be hard to keep on to hold of this project. People are going to want to buy it. That's for sure. So I think it would definitely become Batangas will become a takeover target. Do we see BMV? Oh, but you mean BMV, the whole company? Well, that's a good question as well. It could be. Yeah, it could be. I mean, what's interesting about Korea is, of course, the last foreign mining company to bring a gold mine into production was Ivanhoe in the 1990s. So, gold producers are always looking at new jurisdictions, at what's coming on stream. So I think in particular, Gubong is a huge project. It was the 2nd largest mine, right? So if that gets permitted and goes back into production, that could also be an acquisition target. Although I must say our Korean partners are very proud of the Gubong mine, and I don't think they would want to sell that one without a fight. I mean, they really see going the distance on that one. So, but who knows? It's all in the future if we will be a takeover target. Apex, of course, was Colin Patterson's last major mining project that they acquired for, I think it was about $7 million. And yeah, and then he got out when I think the offer was about 180 or something like that. Next question: what do you envisage annual corporate overhead to be on a per annum basis? And given management's large stake and disjoint between peer valuations, I assume dilution at these levels is not envisaged. So this is one of the reasons why we went to a free carry model. As I said earlier, is when we were a 0.5p share price company, we were at a market cap, I think £3.5–4 million. It's not realistic to be able for a £4 million company to go and raise 10 million to bring about production of projects. So that's why we entered this free carry model. The market seems to like it and has responded well to it. So what does that leave the company having to finance? Just corporate costs, right? That's it. So we don't really have a whole lot of those. So what are the corporate costs? Well, you pay the FCA, you pay the London Stock Exchange, you pay the share registrar. That's basically and a few other costs here and there, and that's about it. So your question is, what do you envisage the annual corporate overhead to be? I suspect it's probably going to be no more than 250 to 300,000 a year. That's about it. So it's not a whole lot. Dilution at these levels, no, we're not really looking at them. I don't really want to do that. Of course, when your share price starts rising, everybody wants to give you money, but I mean, personally, I still think the share price is very low. If you look where we were before the Southern Gold buyout situation, we were close to 6p, and I think we were going on an all-time high. So it's great to go from 0.5 to 1.8, but I still think the share price is very low personally. So yeah, and it's in my best interests personally, speaking as a shareholder and also as director of the company, to keep getting that share price moving. And so that's why you've seen an uptick in stakeholder and investor and market engagement, and we're going to be able to continue to do that. So I see a lot of news flow coming out of Batangas over the next sort of 6 or so months. I see news flow coming out of Gubong as we progress, Kochang as well. And so yeah, so I think that answers that one. Richard J. Thank you for answering my question. We actually met at BMV presentation in Manchester many years ago. Probably the Share Talk presentation, if I remember one. Yeah. Okay. In fact, I'm coming to the UK. I believe it's hopefully do some interviews and so forth. Available for everybody, and I suggest you take a good look through it. If you have any other questions that you want to ask me, feel free to email the company or email myself, aidan@bluebirdmv.com, and I will endeavour to answer. Yeah. Is there any more questions that anybody wants to ask?
And I think you've covered off everything that we've had through. And of course, any further questions do come through, you will have the ability to review those, and we can publish responses on the Investor Meet Company platform. And perhaps before just redirecting investors to give you their feedback, if I could just ask you perhaps for a few closing comments.
Yeah, I think, look, so closing comments, I'm going to Korea next week. So me and Graham Fulton, very excited about this trip. We're going for a couple of reasons. One, continue, advance, close, finish the discussions relating to the Gubong farm out. Also, as a technical meetings in Gubong and in Kochang. So look, the free carry model is working well for Bluebird, and I'm convinced it's the best way forward for the company, and the share price is going to keep moving upwards, in my opinion. There we go.
Fantastic, Aidan. Thank you very much indeed for updating investors today. Can I please ask investors not to close the session, as you know, we're automatically redirected to provide your feedback in order Aidan and the team can better understand your views and expectations. This will only take a few moments to complete and is greatly valued by the company. On behalf of Aidan and the team at Bluebird Merchant Ventures Limited, I'd like to thank you for attending today's presentation, and good morning to you all.